Have you been dreaming of starting your own med spa? Maybe you're already in aesthetic training or in aesthetic space and you just can't wait to start your own practice. The idea of creating something beautiful and having something on your own, working with the clients that you love on your own schedule, it's truly exciting. But behind the glow of social media, the perfect before and afters, and the dream of freedom, there's a side to this business that most people don't talk about. Today, we're going to talk about that side, the financial side that can either make or break your success. Hi, I'm Medina, and I'm MedSpa bookkeeper and profit and growth strategist. I've been in medical accounting industry for over 18 years, and for the last 11, I run my own business helping MedSpa owners just like you getting their books in order, understanding their numbers, and use that insight to grow the profits. This video was actually inspired by a dear client of mine who said, so many nurse injectors and medical providers are opening med spas, but they don't realize how important the financial side is. You need to talk about that. And she was right. So I created this to help you start a med spa with more clarity, confidence, and stronger financial foundation. Now, this video isn't about licenses, legal steps, or branding. It's all about numbers, because knowing your numbers from day one isn't helpful, but essential. Did you know that only 30% of med spa owners reach their profitability in first 2 years? Most struggle not because of lack of talent, but because they don't understand the financial side of the practice as a business. So today, I'll talk about how much it costs to open up a med spa, how much working capital do you really need before becoming profitable, what profitability looks like as a startup, when to hire a bookkeeper, and why working with an expert who knows the med spa industry and helps you grow is one of the smartest moves you can make. Let's start with the startup cost. A full med spa build-out can cost anywhere between $250,000 to over $1 million, depending on location, size, and how much equipment you add at the start. If you're starting smaller, like renting a suite as a solo injector, your costs can be more manageable, but it's still not something to underestimate. So here, expect between $75 and $150 per square foot, plus equipment, software, marketing setup, supplies, etc. But remember, these are just your startup costs. They don't include the money you need to run the business after you open the door. You still need cash to operate, and that is called working capital. It is recommended having at least 3 to 6 months of operating expenses saved up. However, I suggest having rather 6 than 3 months. And that includes your rent, payroll, inventory, marketing, insurance, medical director fees, and other smaller operating expenses, and also cash cushion for unexpected. Also, the time of the year you start can make a big difference. If you're opening during a slow season, like August, you might see fewer initial inquiries and slower early sales. Starting in a busier month like March or April can help you gain traction and build momentum more quickly. Now, let's talk about what happens once the doors are open and sales start coming in. Because even when you're bringing in solid revenue, it doesn't mean you're keeping most of it. Let's say you're a solo injector with a steady client base at this point, bringing in around $40,000 on average in monthly sales. That sounds great, and it's a strong start. But here is how that number breaks down into actual profitability. So your product cost of goods sold, should stay at or below 50%, which means $20,000 is gone right away. Then, for the operating monthly expenses, such as rent, insurance, medical director fees, admin, marketing, supplies, and other expenses. I'm estimating it here to be between $8,000 to $10,000 a month. Again, this is for a solo injector setup. Your actual costs may vary depending on the size and location. And to help you get more accurate estimate, I've linked my startup cost calculator in the description below. It will help you estimate your pre-opening costs, your working capital, and guide you on how to project your sales based on your specific situation, not just what your competitors are bringing in. So your profit and loss may show around $10,000 to $12,000 in monthly profits. But here's the catch. The profit on your profit and loss statement doesn't reflect how much cash you actually have in your bank account and what your take-home pay is. You still owe income tax and self-employment tax on that profit. A safe rule is to set aside 30% of your net profit for taxes, which in our case would be about $3,600 a month. Also, loan payments. If you financed your build-out or a new machine, let's say you have a monthly payment of $2,000, these payments do not show up on your profit and loss report, but they absolutely reduce your available cash in your bank account. So let's break this down again. With $40,000 in monthly sales, you're left on your profit and loss statement with $12,000 minus 30% on tax, $3,600, minus if you have any loan payments. In our case, I used $2,000 a month. Your actual take-home pay here is $6,000 to $7,000 a month. And that is assuming healthy margins and smart decisions. Only 30% of med spas are profitable in their first 2 years. And the other 70, they're usually overworked, underpaid, and overwhelmed. And it's not because they're not great at what they do, it's because they're making common financial mistakes that no one warned them about. Here are the few of the most common ones that I see. Cost of goods sold should be at 50% or less, but very often it creeps up to 60 and over percent, especially during the startup period due to heavy promotions and over discounting, trying to get the patients in through the door. That difference of 10% can drain your profits fast and unknowingly put you in the price-based competition instead of value-driven growth. That extra percent is $4,000 a month loss. That is like $48,000 a year. Marketing costs can also be high, especially in the beginning. Website, ads, branding. Find strategy that it's manageable for your budget so it becomes an investment in growth rather than cash drain where you're spending faster than you're bringing in revenues. Rent ideally should be between 3 and 5% of your total sales. But often I see it closer to being 10% when you're first starting out, especially if you're working in a larger space or have an expensive build out. The challenge here with rent is that rent is a fixed cost. While it's common to be outside of your ideal margin initially, higher rent requires faster growth to cover these costs. And this puts pressure on your cash flow, especially if you're not bringing in enough sales to match those higher expenses. So together, all these mistakes chip away from your profits. And if you're not reviewing your numbers monthly, really looking at your margins, categories, and cash flow, it's so easy to miss it until it's late. Here's one quick comparison. If you were to work as an injector at already established med spa, you could potentially earn the same income or more depending on your experience and how many hours you work, but without the risk and pressure of running the business. That doesn't mean that business ownership isn't worth it, but if you're choosing this path, you really need to understand your numbers. Otherwise, you're taking on all the responsibility with less payoff. But here's the good news. As your sales grow, your fixed costs like rent and basic overhead, they don't increase at the same rate. So after you covered your baseline expenses, a larger share from your revenue will turn straight into profits. And that's where growth starts to pay off. But only if you're still managing your margins and expenses wisely. One helpful tool that I use is break-even analysis. It helps figure out the minimum sales needed to cover the ongoing expenses before making a profit. I can cover this in a future video if you're interested. Let me know in the comments below, and make sure to like and subscribe and hit that notification bell so you get notified when I post again. So now that we covered what profitability looks like, let me share a quick real-life story. About 2 years ago, I was at an event, and I still remember this sweet, kind, stressed med spa owner. And when I told her what I do, she started opening up to me with tears in her eyes. She had worked tirelessly to get her med spa off the ground, but she really was barely breaking even. Cash flow was tight, and despite all of her hard work, it never seemed to be enough. Her instinct initially was to invest in more equipments, thinking a new machine would fix her cash flow issues. She already had equipments in her practice, but she felt that more machines truly meant more clients, more work, more success. That was her mindset. But here's the thing. She didn't have anyone guiding her through the numbers, and she didn't understand them. She didn't know her profit margins. She was over discounting to bring the clients in, but that just ate into her margins even more. So she was stuck always working harder and harder, but never really getting ahead. So what she needed wasn't more equipments. What she really needed was to understand her business better. She needed clarity on where her business stood financially, where her money was going, and how to improve her margins and cash flow moving forward. Unfortunately, this really isn't a rare situation. It's a lot more common than you think. It is so easy to get caught up in a cycle without even realizing it. So if you're feeling like this, or if you know someone who is, I get it. I worked with many owners who have been in this situation. And the good news is it doesn't have to be this way. You can turn it around with the right mindset, the right tools, and clear focus on what matters. Most practices I work with, they see profit grow within 3 to 6 months of us working together. It does require willingness to take action and implement strategies. But with clarity on strategies and growth, they operate with less stress, improve their operations internally, and therefore profit margins, and they're able to make smarter decisions for the future. Studies show that only 10% of med spa owners truly understand their financials. And here are some key metrics that you should know. Revenue by service, provider performance, cost of goods sold and payroll margin, profit per treatment, marketing ROI, return on investment, your monthly net profit, and what is your available cash flow after the loan payments, putting money back into the business, and paying yourself. So you don't need to become finance expert, and you can delegate the work, but you do need to know how your practice is doing financially in all of these aspects. I get this question a lot. When should I hire a bookkeeper? And my answer is as soon as you open. And not just any bookkeeper, you need someone who understands med spas. Because miscategorized expenses, missed deductions, or bad reports, they can cost you thousands of dollars and lead you in the wrong direction. Most bookkeepers stop at recording numbers. And what you need is also someone who understands your industry, your business, your services, and your goals. And that's what I have been doing for last 11 years. I've been helping MedSpa owners like you to make sense of your numbers so that you can make decisions that drive that growth. And all those metrics that I just mentioned, I help you track those as well. If this video helped you, please give it a like, comment below, and subscribe for more content like this. And don't forget to download my free startup cost calculator. Thanks for watching, and I'll see you in the next video.